Hi, welcome back to the show. So this week on Stock Talk, we are going to talk about a lot of stocks. I had a decent amount of requests come through, which is great. And I saw some new names that it was coming from, so that's awesome. Appreciate that. Continue to send in requests. Even one symbol, I think it's good to get your symbols out there. And I'm getting names that I haven't seen before, symbols that I haven't seen. So that's excellent. Before I get into that, I want to make sure I answer a question. Actually, it's been a recurring question over the course of the last 2 to 3 weeks regarding how I would go about adding to an existing position. And so I thought I would spend the first part of this lesson part of the show talking about how I go about a core position and maybe adding and reducing. So let me just get into the agenda. It's really more about the money management side and the position sizing. And the goal, obviously, is to have the biggest position when the stock looks the strongest and looks like it really has the potential to move higher in a fast way. And then when it looks like it wants to correct or consolidate, we want to reduce the size of the position. So just so you know, I've been working with professional money managers for the past 30 years. And so I want to give you sort of a glimpse into how I see them if they have a company that they really like fundamentally, how they go about maybe improving their performance by adding and reducing. And I like to help them using 2 different time frames, and I'll show you how I go about doing that. And then we're going to go into the analysis of the stock requests that came through. So before I get into that, my services can be found at rabilstockresearch.com. So the show is designed for me to give my analysis on your stock picks. My service provides my stock picks. And on top of that, I do analysis on the markets and the individual sectors. But the goal is to really help you identify some attractive looking patterns that look like they have the wind at their back, like good core looking patterns on a monthly and a weekly that have the potential over the next 3 to 6 months. And so that's kind of the goal there. And also I am providing a discount to the service. If you watch the show, you can plug in the coupon code StockTalk and get the first 2 months for $50. So let's go ahead, and I want to get into this discussion on how I would go about what I would call trading around a core position. And it is a bottom-up method, and that means that I'm looking at each stock individually. I don't want the market to determine this. I want to go one stock at a time and say, if I have a holding that I really like in the bigger picture, I think could be a big winner over the course of the next 3 to 5 years, and I don't necessarily want to exit the whole thing, but I know there's certain signs that maybe a stock is topping out. So what I want to show is the goal here is when the weekly and the monthly and their trends are aligned and we have good momentum, we want to add when that's down here, when it's getting going again to the upside. And then once a stock gets extended and maybe shows some signs of momentum divergence on the smaller time frame, like the weekly chart, then we want to reduce. And then as it pulls back and starts to look interesting again, where again the weekly and the monthly trends are aligned, then we want to increase the size. So this is a way to not have to be 100% right or 100% wrong. You don't have to sell out of the entire position and then come back in. It also incorporates what I talked about last week, which is the opposing trend trigger, which means the monthly in this situation, the monthly is always going to be in an uptrend. And what we're looking for to add is when the weekly is actually going in the opposite direction. And then we're looking for signs for that to start to switch back in line with the monthly chart. So let me give you a few examples here that I think that'll make this a little bit more clear. So here's Microsoft. This is its monthly chart. I've kind of pointed out the areas where I think we're looking to add to the position, and that's where we're pulling back to a rising 18-month, which is above a rising 40-month. Now, a lot of times it might not hold right at the 18. It might be in between the 18 and the 40, but both lines will still be rising. And this is the area where I would be looking. Now, it doesn't necessarily tell me the timing. I'm going to go down to the weekly chart or maybe even the daily chart and look for signals on those time frames to help me with the timing. And then after we make a big run to the upside and the price gets extended away from the 18-month, that's where we want to look to reduce. Now, I want to go down to a smaller time frame and look for momentum divergence to show up and, signals to where maybe a climax is developing. You can see that at this peak where we had a nice run to the upside, a big, huge bar to the upside, and then a reversal. And that type of signal is more of a climax rather than a momentum divergence. So you want to be on the lookout for those types of signals as well once you get stretched away from the 18-month line. So this is how I would go about, or I would think about going through this process of adding and reducing to a stock like Microsoft that you might want to own from the longer term. And how much you do, how much you're adding and how much you're reducing is completely up to you. So I don't want to dictate that from that standpoint, because I do think that's more of a personal thing. But if you take 50% of the position off and then you add that back when it comes back and is timely, you're going to improve your performance over time. You're going to make more money. And so one thing I want to make crystal clear to you, though, is that if you think you're going to nail it every single time and you're going to buy on the low day on the pullback or the low week on the pullback and then sell on the low week on the way up, it's really not going to happen. Yeah, you might do that every now and again, but if you think that you're going to be able to do that on a regular basis, you're really going to get frustrated. And so that's the reason why I use the words add and reduce. I don't really want to make an all or nothing decision. If I sell here, but I still have 50 or 75% of the position left, then I'm actually hoping that it keeps going up. What this add and reduce method does is a money management approach to reduce risk when a stock gets extended. And then when a stock is looking its best, you want to have your biggest position on. Let's just go to Apple now. This had a little bit different. It doesn't have the rising 18 and 40 the whole time. So you have to be a little bit more careful about where you're looking to add. So these are some of the techniques that I talk about in the sessions at the beginning of my show. But these are the types of things that you want to learn. Know when you're getting extended away from the 18-month, and know when you're in between the 18 and the 40 on the monthly, and then going down to the smaller time frames to help with the timing to get in and get out. So that's how I would go about doing that. And then just lastly, here's an example of a stock and started in 2010. This is UNH. Back when UNH was one of the strongest stocks out there, and it made a turn. And so this green line is the 18-month line that I've overlaid onto this chart. And if you think about that opposing trend discussion that I talked about last week, I'm looking for where the 18 is crossed down below the 40 on the weekly chart. That's the purple and the blue line. And it's coming down to a rising 18 months. So this is an opposing trend where I got a zero line reversal, and then we rally up and we get momentum divergence where MACD is showing divergence here, and then we get a move back down and find support, opposing trend trigger right at the zero line, and then it moves up again. And then we rally up and you get another momentum divergence, a good spot to be reducing the position again. And then we get another correction that lasts 6 to 9 months. And this is a little bit of a longer time before it gets reversing. But it eventually does get going again. So those are kind of three different signals over the course of 3 to 4 years, and some selling chances as well. And so this is kind of the mentality you want to have in stocks. And then if this were to come down and just break down, then you'd be out of the whole position. But as long as the long-term trend is up, you would stay with it. So this is just some ideas for you in the way that I would think about trading around positions that you really like fundamentally and you want to own for the longer term. Hope this was helpful. Now, let's go ahead and get into some of the analysis. As I mentioned, got a lot of stocks to talk about. Okay, so let's get into the individual stocks. Twitter is the first request that came in. I've got my 4 time frames up. I'm starting with the monthly in the bottom left. And if we notice what's taken place, now, there are earnings. See this on the daily, see this big gap down? Obviously that, I'm assuming was earnings. I haven't even looked, but I'm assuming that was earnings on this. And you've done some damage to the daily chart for sure. But when I look at this on the monthly and the weekly, it just looks like it's developing into an opposing trend pattern on the weekly right now into the monthly. The monthly is still in an uptrend and it still has moving average support, or what I call trend support, around 52.53. So as long as we can hold this 18-month line, I think we should be planning on being on the lookout for signs that the weekly chart is turning the corner. Keep in mind, we're making a higher bottom from this low back here, and this has made a lower low. So we have reverse divergence, but we don't just buy when this shows up, and we don't just buy when the MACD hits the zero line. We look for signs, preferably on the daily, and what's going on right now on the daily bugs me a little bit, because look at how this red DI just broke out. So when I see that after a low ADX condition like that, I'm sort of feeling like I'm not in any big hurry. So generally speaking, I think this is okay from a bigger picture standpoint, but I think we've probably got a month or two to recover from the damage on the shorter term trend. ACGL, Arch Capital. So we've got this on the weekly chart. See this big violent decline? And then we worked sideways around the 35 area for several months, and then we broke out above that. Then we made another move up, and we've been moving sideways, and now we're trying to move up kind of the next level. I think there's resistance somewhere between 45 in the high 40s, something like that. I wouldn't be surprised if we're going to head up towards that line, but I mean, overall, the pattern looks okay. I guess what bothers me a little bit is the ADX hasn't gotten so green. Even though we've moved up significantly, notice especially recently we've made a couple new highs. Green DI has not gotten back above 25. So I'd be inclined to think we're going to have some resistance from this big violent selling up here, somewhere starting probably around 45. OFG. So this one got hit a little bit yesterday, and if you notice, we made a new high in price, but we did not make a new high in MACD, and ADX did not confirm either. So we've got a little bit of momentum divergence in the short term. But when I go and look at this on the monthly chart, you see this, let's just take a bigger picture look at this. See how this just got through this 25 area. So this is a key level, I think, to watch. So we've got a little bit of volatility taking place right now. I think if we can settle down and calm down and stay up above, say, 24 and a half, something like that, I think this is still in pretty good shape. So overall, this pattern looks pretty good. I wouldn't have a problem holding this for sure. I might look for, to see if this is going to hold this support area here on the daily chart before buying new, just based on the recent divergence. UNM. So we've got this 18-month line that was declining back in 2018 and then has been declining all the way. And now it's rising, and we're getting our first test of a rising 18. So I think that's a pretty good sign, because it looks like it's trying to hold that. And notice how on the so we've got a pinch developing on the monthly, and now we've got a zero line reversal developing on the weekly chart. The one thing that bugs me about this weekly is notice the ADX, and you see how the ADX based on the selling, that's based on the red DI, was actually bigger than this last peak, which was based on the buyers. So I think that's enough on the sell side that tells me that I think I can give this a little bit of time to consolidate. I wouldn't necessarily be in a big hurry to buy as this turns back up, and it actually doesn't look like it's going to hold the 18-week. The 18-week is actually still declining right now, so we probably want to give it a little bit more time. Now, with that said, I think there's pretty good support at 25. I just don't know that it's a timely buy right now, just based on what these sellers showed on the last sell-off. TGLS, nice move here, and the trend time frame, or what I would call the finding the tradable trend. If we want to look for the tradable trend, it would be on the weekly chart. We've got the 18 and the 40 rising, and we keep checking back to it and holding it. Now we're getting a little stretched away. I think it would make sense for this to kind of pull back again, maybe sometime soon. I know we just broke out at 25, so maybe we get a little bit more follow through here. But I'm sort of the opinion that I wouldn't be a buyer here, but I'd probably hold what I have, or maybe trim it a little bit, and then look for another entry on a pullback closer to 25, 24. So Mastercard's a stock that I have kind of been warning about in my service and to my institutional clients, and I wanted to show this chart here. So this is the This is the long-term weekly chart. I've only got an 18-week and an 18-month on this line, on this chart. But notice the relative strength and look at what the relative strength has been doing. Even though the stock has been making higher highs and higher lows over the last year, look at how poorly this has been trading relative to the S&P. And so this is a big warning flare for me. And it's not an automatic sell, especially for institutions who can't be traders. But at the same time, I want to wait for signs that this is actually breaking the 18-month. Now we're starting to get a sign. We're testing the 18-month right now. We're getting a look at the weekly. Notice how this the MACD lines are crossing back down below the zero line. And it looks like we just rallied up and kind of failed at the moving averages as well. So we're at a very key level here. I think if we can't hold this support area, this could be the beginning of something a little bit more meaningful to the downside. I mean, 300 would be the first support area if this doesn't hold. So just something to be aware of. VERI, nice looking pattern here. So this is the opposing trend trigger on the monthly and the weekly. Nice move to the upside, and then we got a pullback here. MACD was holding, strong ADX. So that's kind of it covers all the bases on the monthly chart. And then on the weekly, we had the opposing trend where the 18 was below and price was below both. And then look at how the MACD turns. First of all, we had a low ADX condition, and then the MACD turns, and then we get a little pinch play. In fact, a second pinch play, and now we're crossing back above the 40. So pretty good signs. Now, I want to point this out. I think this is pretty important. Based on how strong a decline this was, I would probably do the fib grid on this and say, you know, look at the halfway point between there as your target, and I'll just ballpark it. I think that's more the target for this play. I don't know that I'd be looking for a full-fledged new high or anything like that. So look for the midpoint of this run, and that's probably going to be a good price target. SBUX is still in a corrective mode. I'd love to see the 18 and the 40 week come together and see this MACD get down a little bit closer to the zero line. But this is an orderly correction in an ongoing uptrend, in my opinion. So we had momentum divergence here, similar to the way I described the UNH. See, this was going up, this is going down, and ADX did the same thing. So that's a good spot to reduce a long-term position. If you bought it, you know, especially off the weekly chart, monthly and weekly, you bought it down in here and you had a nice run, you know, maybe reduce the position and then look for this to set up, you know, your ABC. And then if we can get this to turn back to the upside, maybe you can add that back, whatever you sold. So something to think about on that. As long as it stays above an 18-month, we've got pretty good trend in place. Roku is coming back down to test this key area at 300, and that happens to be the area of the 18-month, which is above a rising 40. So we have an 18 and a 40, both rising on the monthly. This still qualifies as a potential 2-time frame opposing trend pattern on the weekly into the monthly. So we want to be aware of that. It's just based on how violent this sell-off was and the fact that the MACD is overrunning a little bit. Yeah, I mean, I don't think I need to be the first guy here at 300. I think you can watch this consolidate sideways, and 350 actually looks like a pretty key area right now, but certainly getting back above these two moving averages would be pretty important. PayPal has had a bit of a rough time in here, but just keep this in mind. So, you know, we had a nice pullback to the 18-month when the market crashed. And now it still had a rising 18 and a rising 40. And then it had a really strong move, hardly pulled back along the way. And then we got up to this big round number at 300, had a couple of spikes up there, just really kind of a problem area. And now we're correcting back to the 18-month. Now, the difference here is this is rising at a faster rate. If look at this 18, it's rising at a faster rate than the 40. So when I see that, I don't necessarily want to buy this pullback. I'm sort of thinking maybe it runs it a little bit and then consolidates. So it's something to just keep in mind. I don't know that I'd be in a huge hurry here. With that said, I mean, I would not be surprised if we have decent support coming in here pretty soon. We've got the 18-month line. We've got price support. You know, I don't like the action. I mean, this is pretty crystal clear when we look at this. Look at what's going on. Look at these red bars. Look at the sellers. Look at how pretty violently what's taking place in MACD and ADX, and then the volume just stands out. Biggest volume we've seen selling-wise, red bars. in a long time. So certainly through this last year. So it's just something you want to realize, and you don't have to feel like you've got to buy these when they're down. Make this stabilize, because if it doesn't hold the 18-month line, this is in for a much longer correction phase. So you got to keep that in mind here. I don't want to jump the gun. See if this can hold. If it doesn't hold, if you're a longer term player and you trimmed it at 300, then you might be looking to get out of the rest if it can't hold this 18-month line. REGN. So on the bigger picture, I think this is somewhat interesting. I really liked how this played out off the monthly and the weekly. Nice move to the upside, and then we had a pullback into the 18-month. It was actually between the 18 and the 40, and then we had a move into the zone here, overran a little bit, but then turned back up through the moving averages. So pretty nice follow through off of that, and then had some trouble when you got back to the old high. The thing that bugs me a little bit is what's taking place right now. This decline, this pullback, which is basically this pullback here on the weekly. Look at how strong the ADX is on the daily. So that tells me I don't know that I really want to play this first run to the upside. We got this big red bar. I think there's going to be some resistance, some up here, somewhere up in this zone between 625 and 650. And I bet it consolidates off that move. I don't think it's be able to get through it on the first try. So longer term, you're still okay because this is bouncing off the 18-month. But short term, I just expect more sideways in the near term. BCC, Boise Cascade. So we've come back and we're holding the 18-month line, and notice this price support at 50. So I like it when the 18-month defines price support. That tells me that it's a strong area. With that said, now the way we're coming in here, I want to point out a few things. So this has now gotten the 18 below the 40, so we've gotten this opposing trend pattern, but now we've gone in and kind of tried to get above, and now we're coming back down, but you never turn this 18-week over. So this might end up coming back down, maybe not all the way down to 50, but taking a little longer, testing support a little bit more, and then working sideways for a little bit more time before it gets to this crucial area at 60. I think 60 is the key level to watch. And if you can't get back through 60, I don't think I would be messing around with this. 50 is the key level in terms of holding the long-term uptrend, and 60 is the key level for this to get going again. So those are the two. I would kind of frame it out that way. CPG has turned the corner. 18-month is now rising. And I do want to point this out. Look at this monthly. Let's just look at this. So green DI. So green DI has come back up above 25 and held for the first time. That was a cross above, but it didn't hold. And then way back here at the beginning of the chart, we had a little of that. But it's been years. I mean, this goes all the way back to 2011 since we've had green DI really turning the corner here. So I think that's a good sign for the longer term, but it's not necessarily a timely signal. It's just telling you kind of the backdrop of what's going on. What I'd like to look at now is how this plays out relative to this breakout area on the weekly chart. So we've got this key level just above, just right under 5, right? If we can come down in here and hold this area, so I'd be looking for something like this. If this holds here and then comes back above 5, kind of respects this breakout area, then I think we're in for something pretty meaningful. I also want to see green DI hold here and turn back to the upside. If we got that, then that would tell me that this trend is probably really going to get going based on what I'm seeing on the monthly. Jacobs Engineering. So this is one of those stocks where on the monthly chart, it made a big move. And instead of pulling back to the 18-month line, it's just consolidating sideways. And we can see the 18-month is rising. I did a lesson on this about a month ago where when this 18-month is rising, then we probably shouldn't expect a full-fledged pullback to the 18-month line. So, that I think that's an important factor here. Now, we didn't get the 18-month the 18-week and the 18 and the 40-week to meet up, and we didn't get the MACD to come all the way down to the zero line, but we did get ADX to come down pretty low. So that doesn't completely discount this as a potential opportunity. I mean, I'm not going to always get the perfect setup here, but what I would probably do in this instance is let this move up and then look to buy the first pullback as this is cupping around. That gives me a little bit more evidence that this is truly not just a test of this high, but it's really a turnaround developing again. So that would be the only thing I would suggest. You can play it off the daily chart with low ADX on a breakout through 140 if you want. You have to play it a little bit tighter that way if you're going to do that. Summit Materials. So this is a pretty similar situation. If we look at this monthly chart, we have this strong up move. And because it's more of a sideways consolidation, not a real deep pullback, we have a rising ADX throughout this whole period. So we shouldn't expect this to come all the way down to touch the 18-month. And that's okay. There was pretty good price support around 30, low 30. So I think overall this looks pretty good. But similar to Jacobs Engineering, notice what's going on here. We're starting to turn up before we get the 18 and the 40 together. So no problem with that. It's just you have to alter your thinking a little bit and look for the first higher low. Notice how this just moved up and we haven't had a higher pivot low yet. So let this cup around and look for your first higher pivot low. Now, it might just go up a little bit more and then do that and hold 35 and play out that way, and that's fine. But I think that's a safer play than just buying a rally up against this prior peak. So that's how I would do it. I would see how serious the selling is up here. And if it's pretty mild, then I think you can play the next move to the upside. COF, I can only guess, is had earnings over the last day or two, just based on this. Now, I'm not going through and looking at these in detail. I want to give you guys my initial glimpse of what I'm seeing when I look at these charts, okay? I don't want to have any preconceived notions. I don't want to look at the fundamentals. I'm giving you pure, unadulterated technical opinion based on my signals and my method. So we've got this stock that was really extended on the 18-month line and rallied up here and started spinning around a little bit, showing some signs a little bit of distribution. Now, we've got a rising 18-month right now, but if this breaks 150, my guess is this ADX is going to start to roll over a little bit, and then that means that this whole pattern is going to take a lot longer, and the 18-month and the price are probably going to meet up somewhere between 125 and 150 is my guess. So we're at a kind of a key level, but just recognize what's going on in the short term. This tells you don't have to be in a hurry. If you're long this stock and you haven't bought and you haven't sold any, this is not a bad spot actually, even though it's dropped off the highs. This is not a bad spot to consider maybe reducing a little bit just based on the recent action and the fact that we have not reached the MACD is still pretty extended right now. So I think that's important to recognize. Let's do one more stock here. Construction Partners, ROAD. So sideways consolidation while MACD moves down and ADX moves down. See this weekly chart? We have a move to the upside. Price is basically just going sideways and making higher bottoms. It's almost like an ascending triangle, and we have low ADX here. So you'd be looking for a breakout, I think, is the best, strong move through 35, I think, is the way to look at this. Well, that's it for today. Thanks for joining me. Please feel free to reach out to me. My contact information is listed. And lots of new requests came in from different people. That's great. Keep on sending them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.